Affordability rules are ever changing in the UK and making it impossible for some to potentially purchase a property.
House prices are also increasing, limiting the options in your area. So what do you do?
Step forward, joint borrower, sole proprietor. So what is joint borrower sole proprietor? Now, joint borrower sole proprietor, also known as JBSP, is when you're adding somebody else onto the mortgage application to help support the borrowing. Now, the only difference is, compared to a traditional mortgage, is that supporting borrower isn't actually named on the title deeds at all. So technically speaking, they're not a legal owner of the property. So who can be named as the borrower?
So the most common option is where your mum or dad obviously help their son or daughter, or it could be a brother or sister supporting the sibling.
The good news is some lenders actually don't have any restrictions at all. So if you have no immediate family relationship with the potential borrower at all, so it could be a family friend, it could be your neighbour, as long as they're happy to do so, they can be named as a borrower on the mortgage application. The number of borrowers on a mortgage application can be as many as 4. So that means that you can actually have 4 borrowers on the mortgage application and utilise 4 incomes. So how are these mortgage applications assessed?
So income and expenditure for the main borrower is just like a standard mortgage application, and that also applies for the person that's also being added to the mortgage. They'll take into account any mortgage payments or unsecured payments for the additional borrower.
So any new mortgage must be affordable alongside any existing commitments.
So when it comes to credit checks, both the borrower and the supporting borrower are subject to credit checks. So if there is any adverse credit in the background, that can impact the mortgage application.
So let's discuss mortgage term. Now, the mortgage term will be assessed on the eldest borrower. So if you've got mum and dad close to retirement age, you may be restricted on the term that's available for you. However, potentially the lender may take into account any retirement income that your parents may receive, but the lender will also look at any succession planning. So can that main borrower afford the mortgage as years go by when my mum and dad are potentially going to retire?
When it comes to sustainability, some lenders expect the property owner to be on a career path that allows them to take the mortgage in their own name in the not too distant future.
Now let's discuss deposits. When it comes to deposits, the good news is the borrower not being named on the title deeds can actually supply the deposit towards the mortgage application. And further good news, depending on market conditions, you can actually get away with this type of mortgage with a 5% deposit.
That means this makes this type of mortgage great for people with smaller deposits.
As part of the process, lenders will insist the borrower not be named on the title deeds seeks independent legal advice. And this is to ensure that they understand what they are applying for and they fully understand the terms and conditions of the mortgage.
So a number of clients have come to us recently with this scenario.
Will we benefit from full stamp duty relief because my partner is a first-time buyer? The answer to the question is no. You must both be first-time buyers to benefit from the full relief of the stamp duty. However, one way of getting around this is potentially the first-time buyer being named as a proprietor, so being named on the title deeds, but the second applicant being named just a borrower, and that essentially means that because they're not on the title deeds at all, there may be an element of stamp duty relief. So in summary, joint borrower sole proprietor is having multiple borrowers on the mortgage application, but potentially only one proprietor, i.e. one owner, on the title deeds.
People that can be named on the mortgage, for example, is mum, your dad, brothers or sisters. Some lenders also don't require a relationship. The income and expenditure is taken on both borrowers, and also credit checks are also done on both borrowers.
The mortgage term can have an impact on the borrowing because it is assessed on the eldest borrower. Also, deposit can be provided by somebody not going onto the title deeds at all, i.e. the legal owner of the property. And also, you can potentially get away with getting this type of mortgage with a very, very small deposit, i.e. 5%.
For more information around first-time buyer mortgages, check out this video.